You're staring at the email that just ended your paycheck. Your next paycheck is your last one. Rent is still due on the 1st. Your car payment doesn't care about layoffs. Your kids still need lunch money. And your brain is already racing. How long do I have before everything falls apart? This isn't just about losing a job. It's about losing the money that keeps your life from sliding into chaos. Is exactly what we're going to walk through together. This video is about how to survive a layoff financially in the US and come out the other side without burning your entire future down in the process. Hey, I'm Dylan from Dylan Investments. Money Talks, I translate it for you. By the time we're done, you're going to know how to stabilize the next few weeks, how to protect the essentials, how to deal with debt and bills so they don't crush you, how to decide which money moves are smart and which ones are pure panic, and how to turn this from my life is over into this sucks, but I know exactly what to do next. Let's start with what usually happens, because it's almost always the same story. One day you're a valued team member. The next day, you're a line item in a cost-cutting spreadsheet. That alone is emotionally brutal. But the real damage kicks in when you react purely from fear, not from a plan. People empty their 401(k) overnight, stop opening their mail, ignore their landlord, and swipe credit cards like life rafts. 6 months later, they're back at work, but the debt hole they dug is deeper than the layoff itself. So here's the mindset shift I want you to hold on to the whole time we talk. The layoff is an emotional earthquake, but financially it's a math problem. A hard one, but still a problem that can be broken down into pieces. Your job right now is not to predict the future or magically fix everything. Your job is to slow things down, run the numbers honestly, and make calm, boring decisions that keep you alive financially while you figure out what's next. The first thing I'd do, if I were sitting at your kitchen table and you told me you got laid off, is simple. I'd say, freeze. Don't sign anything yet. A lot of people rush to sign separation agreements, severance packages, or random HR documents without really reading them because they just want the nightmare to be over. Take a breath. Go through everything they sent you. You want to know exactly what your final paycheck looks like, whether you're getting paid out for unused vacation time, whether there's any severance, and how long your health insurance stays active. This is also where you grab a notebook or open a blank note on your phone and start treating this like a mini financial report on your own life. Write down your current checking account balance, your savings, and any cash you can access without penalties or drama. Note the date of your last paycheck and your next rent or mortgage due date. It doesn't have to be perfect. The goal is just to get the uncertainty out of your head and into numbers you can see. Here's where things start to get really real. You need a bare-bones survival number for your monthly life. Not your normal lifestyle. Not your when things are good budget. I'm talking about the number that keeps a roof over your head, lights on, food in the kitchen, and the car running if you need it. That's housing, basic utilities, bare-bones groceries, transportation, and minimum payments on any debts. Everything else is negotiable or cuttable in a crisis. To make this feel less abstract, imagine a guy named Jason. Jason gets laid off from his office job, making $65K a year. He used to spend money like the job would last forever. Subscriptions, eating out 3 times a week, random Amazon runs. After the layoff, when we sat down and built his survival number, he realized something wild. His normal spending was like $4,000 a month. His bare-bones survival number, with real cuts and a simpler lifestyle, was more like $2,500. That gap is what gave him breathing room while he looked for the next job. Once you've got that survival number, you can ask the critical question, how many months of runway do I have at this level? So if you've got $5,000 in the bank and your survival number is $2,500, that's 2 months of runway from savings alone. That probably doesn't feel like a lot, but it's better to know I have 2 months at this level than to live in a haze and suddenly slam into zero. Uncertainty is scarier than bad news. Numbers take some of the fear out, even when they're tight. Now, here's where it gets interesting, because up to this point, we've only talked about what's inside your bank account. But a layoff in the US also plugs you into a few systems that are boring, annoying, and extremely important. The big one is unemployment benefits. In a lot of cases, if you were laid off through no fault of your own, you may qualify for weekly unemployment payments from your state. These aren't meant to replace your full salary. but they can add weeks or months of survival to your runway. The mistake a lot of people make is waiting to apply because they feel embarrassed or they think they'll have a new job in a week or two. Don't do that. If you've been laid off, your pride is not worth missing out on money that's literally designed for this exact situation. Apply as soon as you can in your state. Expect paperwork, waiting periods, and minor headaches. But remember, every extra dollar coming in stretches your runway and gives you more time to choose your next job instead of grabbing the first paycheck out of desperation. Let's talk about debt and bills for a second, because this is usually where shame creeps in the hardest. When income stops, that stack of credit cards, personal loans, and maybe even a car loan can feel like a swarm of bees around your head. Most people either ignore them completely or try to keep paying everything exactly the way they were before, even if it means putting groceries on a card. Neither of those is ideal. If I were you, I'd put your bills into 3 buckets in your mind. First are the essentials that keep you alive and sheltered: rent or mortgage, basic utilities, basic food. Second are the debts and commitments that will get ugly fast if you ignore them, but might have hardship options: car loans, student loans, credit cards. Third are everything else: subscriptions, nice-to-haves, the stuff that makes life fun but that you can live without for a while. That third bucket is the first place you start cutting, even if it stings. Here's the part most people never see until someone forces them to do it. Calling your creditors early and being honest actually works more often than you'd think. If you let a credit card go 90 days late in silence, you're in damage control mode. If you call them right after a layoff and say, "Hey, I just lost my job. I want to pay you, but I need a temporary hardship plan," sometimes they'll lower your minimum payment, pause interest for a bit, or set up a short-term arrangement. Same with car lenders and sometimes even landlords. Not always, but often enough that it's absolutely worth picking up the phone. Now, let's deal with one of the big, nasty questions that hits immediately after a layoff in the US: health insurance. You're probably wondering, do I still have coverage? For how long? Am I about to get destroyed by one emergency room bill? Usually, your employer coverage runs through the end of the month you were laid off, but you have to confirm with HR because every company handles their timing a little differently. Once that ends, you've got a few options and none of them feel fun, but they're better than going bare if you can avoid it. One option is COBRA, which is basically continuing your employer plan, but now you pay the full cost plus a fee. That's why people get sticker shock when they see the COBRA letter. Another option is buying a plan on the health insurance marketplace if losing your job qualifies you for a special enrollment period, which it often does. In some states, and for some incomes, you might even qualify for subsidies that make those plans cheaper than COBRA. You might also be able to jump onto a spouse's plan if they have one. The key idea is this: even if money is tight, having some form of coverage to protect you from catastrophic medical bills is a financial survival move, not a luxury. Let's circle back to that feeling when you open your banking app and see the balance dropping. This is where a lot of people ask, should I cash out my 401k or retirement account to survive? I get why that question comes up. The retirement account feels like a big pile of money you could use right now. But early withdrawals usually come with taxes and penalties, and they also rob your future self of years of growth. It's not just I pulled out 10 grand. It's I pulled out 10 grand that could have become 30 or 40 over time. So here's how I think about it. If you have literally no other options, no savings, you're about to miss rent, and you've already cut everything and tried to negotiate, then tapping a small piece of retirement money as a last resort can sometimes be the move to keep you from becoming homeless or going into high-interest credit card debt. But that's a break glass in case of emergency decision, not the first tool you grab. Before you touch retirement, I'd look at selling stuff you don't actually use, taking on temporary work, tightening your survival budget, and squeezing every inch out of unemployment and hardship programs. There's also another angle people forget. Maybe you have a side account you've never really counted as savings. That could be an HSA with some cash, an old savings account with a few $100, or even extra stuff around the house that has real resale value. A bike, electronics you don't use, furniture, tools. None of that solves everything. But if selling a few things gives you another week of runway or prevents one more credit card swipe, it's part of your survival strategy. Now let's talk about income from the other side. What you can bring in while you're between jobs. I'm not going to throw some fake, just start a business fantasy at you. You're stressed, you're tired, and you need cash flow, not a motivational slogan. What I would ask is, what's the fastest, least complicated way you can turn your time into money for the next month or two, even if it's not your dream work? That could be gig work, temp agency jobs, contract work in your field, or even picking up extra shifts in something totally different from your old job. Picture another guy, we'll call him Mike. Mike was a project manager laid off from a tech company. While he was job hunting, he picked up weekend shifts at a warehouse and did some basic freelance admin work remotely for a small business. None of it was glamorous. None of it was on brand for his resume. But those extra few $100s a week, combined with unemployment, meant he didn't have to torch his retirement or max out his credit cards. He treated that period like a bridge, not a destination. Here's a simple way to frame it in your head. You've got 3 levers: lower your survival number, increase your income, and add outside help like unemployment or hardship plans. The more you pull on all 3, even just a little, the less pressure any single one has to carry. You might not be able to pull every lever equally. That's fine. But if you shrink your expenses by a few hundred, bring in a few hundred from temporary work, and get a few hundred from unemployment, suddenly the gap between what life costs and what's coming in is a lot smaller than it looked in that first moment of panic. Let's zoom out for a second and talk about the bigger system you're living in, because it's important to separate what's your fault from what's not. In the US, most jobs are at will. That means companies can lay you off for business reasons, even if you were doing great work. They might do it to make the quarterly numbers look good, to impress investors, or because they genuinely ran into trouble. If you treat every layoff like a personal moral verdict on you as a human, you're going to carry a weight that doesn't belong to you. At the same time, the system isn't going to protect you automatically. That's the hard part. Companies are going to do what's best for them. Your job is to do what's best for you and your family inside the rules that actually exist. That's why this whole conversation is about learning the rules of the layoff game. What happens to your pay, your benefits, your debts, your insurance, and your daily bills, and how to play that game with clear eyes instead of blind panic. Remember that moment we started with, staring at the email that ended your paycheck? Let's rewind that scene and replay it with everything we've talked about so far. You get the news. It still stings. Your heart still drops. But instead of spiraling, you say, okay, step 1, I'm not signing anything today. Step 2, I'm getting my numbers on paper. Step 3, I'm applying for unemployment right away and building my bare-bones survival budget. Same crappy situation, completely different level of control. Once the immediate fires are under control, there's another question I love to put on the table. How do you want your life to look when this layoff is just a story you tell later? That question sounds big, but financially it leads to some very concrete moves. Maybe your next job needs to be closer to home to cut commute costs. Maybe you want to build a bigger emergency fund so you're never this vulnerable again. Maybe you want to keep your fixed expenses lower next time you get a raise, so a single job loss doesn't feel like the edge of cliff. Think about Alex, another guy I know. He went through a brutal layoff where he had almost no savings and had to borrow from family just to get through 2 months. He eventually found a new job, but he made himself a promise. Next time, I want at least 3 months of survival expenses in the bank. Over the next year and a half, every time he got a paycheck, he peeled off a small percentage into a separate account. Eventually, he hit that 3-month mark. When his company later had another round of layoffs, this time he survived it. He slept better anyway, because he knew he could handle it if his name showed up on that list. This is the long-term lesson buried inside the short-term pain. Layoffs are a reminder that a single paycheck is fragile. I don't say that to make you feel worse. I say it because once you've seen how vulnerable a single paycheck can be, you're in the perfect position to start building a life that's a little more shock-proof. That might mean multiple income streams over time. It might mean less debt. It might mean a lifestyle that doesn't have you stretched to the max when you're employed, so you have some slack when you're not. Before we wrap up, I want to say this clearly. Surviving a layoff financially isn't about doing everything perfectly. It's about avoiding the few big mistakes that cause long-term damage and making a handful of solid, boring moves that buy you time and protect your future. Don't ignore your mail. Don't ghost your creditors. Don't light your retirement savings on fire without thinking it through. Do get your numbers on paper. Do apply for help that exists. Do communicate early with the people and companies you owe money to. Do be willing to temporarily live a simpler, less impressive lifestyle in exchange for more control. If this is all hitting close to home because you're going through it right now, my suggestion is simple. Watch this again with a notebook, pause it every few minutes, and turn what I'm saying into your own custom plan. Save this video so you can come back to it on the days your brain just wants to shut down. And if you want to keep building a life that's more layoff resistant in the future, the next thing to learn about is how to build an emergency fund and structure your everyday budget so you're not living one paycheck decision away from chaos. That's exactly what I break down in another video. For now, just remember, this layoff is not the final chapter in your money story. It's a plot twist, and plot twists, handled calmly, can actually set up better chapters later. You deserve a life where one company's decision doesn't completely own your security. And starting today, with the facts in front of you and a basic playbook in your hands, you're already closer to that life than you were before you hit play on this video. I'm Dylan from Dylan Investments. Money talks, and I'll keep translating it for you. How good will my friend?